Next topic, forfeiture of share. Forfeiture means cancellation of shares. When company issues the shares, they collect from the applicant in several stages such as application money, allotment money, first call money, second and final call money, and this is how face value of shares are collected from the applicant. For example, application money is 3 rupees, allotment money is 2 rupees, first call is 3 rupees, and second call is 2 rupees. This is how face value of 10 rupees is collected by the company. But if any one of the shareholders or applicant does not pay call money, first call or second call or both the calls, in that case company sends reminder to the applicant, and if the money is not received or the applicant has not responded for the call money due, then the company can cancel the shares as per article of association provisions. So in this case there are two effects. Either they will pay the call money will be received by the company, or they will not receive call money. So in this case the company will forfeit the shares on which the call money is not received, and it will be reissued to some another shareholders or some other person. The reissue of share can be at par, premium, or at discount, but generally the money which is not received from the applicant will be added to the original amount and it will be issued either at par or at discount, but not at premium. So generally what company do, if they receive application money and allotment money and they do not receive call money, then they will send the reminder to the applicant for payment of call money, and even after second call money they do not, the applicant do not provide the both the call money, then after sending reminders they will cancel the shares. That is, they will, the company will forfeit the shares, and after forfeiture there will be separate entry in the books of accounts, and after forfeiture the company can reissue the forfeited shares, and generally company reissues the forfeited shares at discount. So forfeiture of share journal entry will be share capital account debit to share forfeited or forfeiture account to call in arrears account. This is the amount of which money is received by the company and money is paid by the applicant. This is the money which is not received by the company, and total amount is share capital account debit. So journal entry will be share capital account debit to share forfeited account. This is the amount which is received by the company. For example, application money is 3 rupees, allotment money 2 rupees per share, and call money is 2 rupees per share. Second call money is 3 rupees per share, total 10 rupees face value, and one of the applicant has not paid first call money. Journal entry will be share capital account debit to share forfeiture account to call in arrears account. Call in arrear account will be credited with 2 rupees per share, the amount which is not received by the company, and share forfeiture account will be credited with 5 rupees per share, the amount which is received by the company from the applicant. So 5 rupees for share forfeiture account, 2 rupees for call in arrears account, and total 7 rupees per share will be debited with share capital account. If company has issued 10,000 equity shares and out of 10,000 200 equity shares are call in arrears, then 200 into 5 rupees, that is 1000 rupees will be credited with share forfeiture account, and 200 into 2 400 rupees will be credited with call in arrears account. Total 1400 will be debited with share capital account. How this 1400 has come? So 200 shares into total 7 rupees. 200 into 7 rupees. So journal entry will be share capital account debit to share forfeiture account to call in arrears account. Remember this, earlier share earlier share capital account was credited and call in arrears was debited. But now the effect is to be cancelled. So the reverse entry will come and forfeiture account will be credited with the amount which is received, that is 5 rupees in this case, and call in arrears will be recorded at the rate the money which is not received by the company. But what will be effect if shares are issued at premium? In this case, there are two scenarios. Premium money is paid by the applicant and received by the company, and the amount of premium which is included in the allotment money is not paid by the applicant and it is not received by the company. In this scenario, the entry will be, if premium money is paid, then entry will be normally share capital account debit to share forfeiture account and to call in arrears account. And if premium money is not paid, then the journal entry will be share capital account debit, share premium account debit to share forfeiture account to call in arrears account. In this scenario, share premium account will be debited. The premium money which is not received will be debited because earlier it was credited when allotment money was due. Journal entry was allotment account debit to share capital account to share premium account. So earlier at the time of allotment money due, the entry in this entry we have credited the share premium account, but if the money is not received from the applicant, in that case the share premium account will be debited to cancel the effect of previous entry. So in simple terms, if shares are issued at premium and premium is received by the company and paid by the allottee, then the entry will be share capital account debit to forfeiture account and call in arrears account. The amount will be the money which is received by the company and which is not received by the company will be call in arrears account. But if shares are issued at premium and premium money is not received by the company, in this case the entry will be share capital account debit, share premium account debit to share forfeiture account will be credited with the amount which is received by the company and call in arrear account credit the amount which is not received by the company. Security premium account will be debited with the security money. For example, if share premium is 2 rupees per share and 200 shares are call in arrears, then 200 into 2 rupees premium, 400 rupees will be share premium account debit. Now let's take example. Issued 10,000 shares at 10 rupees face value and issue value is 12 rupees. It means there are 2 rupees premium. Generally premium money is included in the allotment money. Application money is 3 rupees, allotment money 5 rupees. Out of 5 rupees, 3 rupees is actual money, and 2 rupees is premium money. Call money is 4 rupees and total 12 rupees is issued value. Application received on 12,000 shares. Company has issued 10,000 equity shares, but application has received for 12,000 number of shares. Company has allotted shares on pro rata basis. It means company has not refunded the amount, but it is adjusted in the allotment money. Next, Vinita holding 200 shares, not paid call money, so company forfeited. In this case, our first journal entry will be bank account debit to equity share application account. Amount will be 12,000 into 3 rupees, that is 36,000 rupees. Second journal entry will be equity share application account debit 36,000 rupees. This reverse entry, equity share application account debit 36,000. Now to equity share capital account, to equity share allotment account. Equity share capital will be credited with 10,000 into 3, the actual amount which is related to application money. So 10,000 into 3 rupees, 30,000 rupees, and balancing 60,000 rupees, which is extra and received in excess of actual money. It will be credited to allotment money. Third journal entry will be allotment money due. So equity share allotment account debit to equity share capital account, to share premium account, because premium premium is already included in the allotment money. So share premium is 2 rupees per share into 10,000 equity share. So amount will be 20,000 rupees. Equity share capital account will be credited with 3 rupees into 10,000, 30,000 rupees, and total amount is 5 rupees per share into 10,000 equity shares, 50,000 rupees. So entry will be equity share allotment account debit 50,000 rupees, to equity share capital account 30,000 rupees, to share premium account 20,000 rupees. 10,000 into 2 rupees per share premium 20,000. This is capital money. 10,000 into 3 rupees per share, and total is 10,000 into 5 rupees per share allotment money. And fourth entry will be on receipt of allotment money, bank account debit to equity share allotment account. Amount will be 50,000 minus, we have already adjusted 6,000 rupees earlier, so 50,000 of allotment money minus the adjusted amount of allotment money 6,000 rupees. So 44,000 rupees will be received. 44. Remember this thing. Already we have received allotment money at the time of application money, and we have adjusted the money with pro rata allotment. So entry will be bank account debit to equity share allotment account, and the narration will be being allotment money received and balancing amount in adjusted from application money. Fifth journal entry, call money due on 10,000 shares. Journal entry will be equity share first call account debit to equity share capital account. Amount will be 4 rupees per share into 10,000, 40,000 rupees. Being call money due on 10,000 equity shares. And sixth journal entry will be bank account debit call in arrear account debit because on 2000 shares call money is not received. So bank account debit, call in arrear account debit to equity share first and final call account. So journal entry will be bank account debit, call in arrears account debit to equity share first and final call account. The equity share call money will be credited with 10,000 shares into 4 rupees per share call money. Amount is 40,000 rupees. Call money not received on 200 shares, 4 rupees not received. So call in arrear will be debited with 800 rupees, and balancing figure 39,200 will be debited with bank account. So this amount will be 10,000 minus 200. Call money received on 9,800 shares into 4 rupees. So amount will be 39,200. Narration being call money received on 9,800 shares and call in arrears on 200 shares. Now, company forfeited the shares of Vinita after call money. Next journal entry will be forfeiture of shares. So, equity share capital account debit to share forfeited account to call in arrears account. The share forfeiture account will be credited with the amount received, and call in arrear will be the amount not received. So on 200 shares, 8 rupees is received. So amount will be credited with 1600, and 4 rupees of call money is not received. So amount will be 800. Total 1600 plus 800, 2400. Equity share account debit 2400 to share forfeiture account 1600 to call in arrears account 800. Narration will be being 200 shares forfeited after call money not received from Vinita for 200 equity shares. So this is the entry of forfeiture. In case of forfeiture of shares, the balance sheet will be presented in this manner. Number of shares at the rate face value, and amount will be written, the money which is received, equity share capital, security premium if any. We will be write call in arrears if money is not received, but at the time of forfeiture this call in arrears is cancelled. This call in arrears get cancelled, hence we will write share forfeiture account, and total amount will be in the bank column, bank account. So this is the presentation of equity share capital in case of forfeiture of share. Let's discuss if the shares are issued at discount and later on there is a call in arrears and the shares are forfeited. In that case, the entry will be equity share capital account debit. Remember, this is the case of forfeiture of shares which are issued on discount to share forfeiture account. This is the amount which is received by the company to call in arrears account, this is the amount which is not received by the company from the applicant, and to discount on issue of equity shares, this amount will be discounted amount which is given in the question. So if shares are forfeited which were issued on discount earlier, in that case the journal entry will be equity share capital account debit to share forfeiture account to call in arrears account to discount on issue of shares account. Earlier, discount on issue of shares was debited at the time of passing entry for allotment. So later on, at the time of forfeiture, the amount, the entry will be credited to close the effect of discount. Now let's discuss the reissue of forfeited shares. If company has forfeited the shares on which the call money is not received, and later on the company issues the shares, in that case it is called as reissue of shares, and company can reissue the forfeited shares at par, premium, or at discount. Reissue of share at par means face value of 10 rupees issued at 10 rupees. It also includes the call in arrears which was previously cancelled, and share forfeited amount. Company can issue the forfeited shares at premium, that is face value of 10 rupees issued at 12 rupees. If face value is less than issue value or issue value is more than face value, then it is called as issue of share at premium, and company can reissue the forfeited shares at discount, that is face value of 10 rupees issued at 8 rupees. As per the provision of Companies Act, the company cannot issue the shares at discount, but company can reissue the forfeited shares at discount. So the entry for reissue of forfeited shares will be first entry for forfeiture of shares account, forfeiture entry. Second effect will be entry of reissue of shares. So entry for forfeiture is equity share capital account debit to share forfeiture account to call in arrears account. This is the amount which is received by the company, and call in arrears is the amount which is not received by the company. So along with this journal entry, reissue of shares entry will be bank account debit because company has reissued the shares. So money comes into the business, bank account debit, share forfeited account debit, and share capital account credit. So at the time of reissue of shares, bank account will be debited because money comes in. Share forfeited account debit because earlier we have credited the share forfeiture account to share capital account credit because earlier we have debited the share capital account at the time of forfeiture. So again at the time of reissue of shares, the share capital account will be credited. So bank account will be debited with the money which is received in cash. Share forfeited account will be debited the discounted amount on which the shares are issued, and to share capital account total of bank account and share forfeiture account. And one more entry will come, the difference between these two amount of share forfeiture. If share forfeiture is credited with 8,000 and share forfeiture debited is 4,000, then the difference will be share forfeiture account debit 4,000 rupees. This 4,000 rupees is difference between 8,000 and 4,000. So it will be debited to capital reserve account. This is the important point to note. Share forfeiture account debit to capital reserve account. The balancing amount, the excess amount of share forfeiture at the time of reissue of shares, it will be transferred to capital reserve account, because this is the excessive money which is received by the company. So it will be credited to capital reserve. Capital reserve for the purpose which is not regular in nature. So general reserve is used for regular purpose and capital reserve is used for non-regular purpose. So forfeited account will be debited to capital reserve account. Remember, the difference in share forfeited account will be transferred to capital reserve account at the time of reissue of forfeited shares. This will be the last entry. Now let's discuss the overall journal entry of company's account in case of issue of shares. It includes the issue of share at par, the share is forfeited, and share is reissued. It means it covers issue of share, forfeiture of share, and reissue of forfeited shares. So the question is, company issued 50,000 equity shares at the rate 100 rupees, face value is 100 rupees, application money is 30 rupees, allotment money is 40 rupees, and call money is 30 rupees. Total 100 rupees is face value. It is issued at 100 rupees. It means the company has issued the shares at par. Hence, face value is same as issue value. Public has subscribed 35,000 equity shares. Company has issued 50,000 equity shares, but general public has offered for 35,000 only. So, application, allotment, and call money will be recorded for 35,000 equity shares only. This is the case of under subscription. And call money on 4,000 shares is not received. The call money on 4,000 equity shares is not received. Hence, the company has decided to forfeit the shares, and these forfeited shares are issued at 80 rupees. So, this is the case of issue of shares, forfeiture of shares, and reissue of forfeited shares. So, first journal entry will be for application money received 35,000 equity shares subscribed by the public into 30 rupees per application. First journal entry will be bank account debit to equity share application account 35,000 equity shares which are applied by the general public into 30 rupees call money. Bank account is debited because the bank is the receiver of application money. The applicant has submitted the money into the bank. So bank account debit to equity share application account 35,000 into 30 rupees, 10,50,000 rupees is the amount. 10,50,000 rupees debited, 10,000, 10,50,000 rupees credited. Narration, being application money received on 35,000 shares. Second journal entry, transfer of application money to share capital account. So entry will be equity share application account debit 10,50,000 rupees to equity share capital account 10,50,000 rupees. Third entry will be allotment money due. So allotment money is 40 rupees per share into 35,000 equity shares. Share allotment account debit or equity share allotment account debit to equity share capital account. Amount will be 35,000 shares into 40 rupees per share allotment money. 14 lakh rupees is the amount. Being allotment money due on 35,000 equity shares. Fourth entry, allotment money received. So journal entry will be bank account debit to equity share allotment account 14 lakh rupees. Fifth entry, call money due on 35,000 equity shares. So journal entry will be equity share first and final call account debit to equity share capital account 35,000 into call money is 30 rupees per share. So amount will be 10,50,000 rupees. Narration, being call money due on 35,000 equity shares. Next, sixth journal entry will be call money received and call in arrear on 4,000 shares. So bank account debit, call in arrears account debit to equity share first and final call account. Here bank account will be debited with the amount which is received. Call in arrears account will be debited with the money which is not received, and total amount will be credited with equity share call account. So the money on which money is not received is 4,000 shares. 30 rupees is not received call money. So 4,000 shares into 30 rupees per share, 1,20,000 rupees not received. Call in arrears account will be debited. Money on which the money is received will be debited with bank account. So 35,000 shares minus 4,000 shares, 31,000 shares call money received at the rate 30 rupees per share. So entry will be 31,000 into 30 rupees, 9,30,000 rupees, and to equity share first and final call account will be credited with total amount 10,50,000 rupees. Bank account will be debited for the shares on which call money is received, that is 31,000 equity shares. Call in arrears account will be debited with the shares on which call money is not received, that is 4,000 equity shares. And to equity share first and final call account will be credited with total amount, that is 10,50,000 rupees. Now after call money, the shares are forfeited. So the entry for forfeiture of share will be equity share capital account debit to equity share forfeiture account to call in arrears account. Now, seventh entry is equity share capital account debit to share forfeiture account to call in arrears account. Forfeiture will be credited with the amount which is received by the company, that is 4,000 into 70 rupees, 2,80,000 rupees. Call in arrears will be credited with this amount, 1,20,000 rupees, and total amount 4 lakh rupees will be debited to share capital account. So journal entry will be share capital account debit 4 lakh rupees to share forfeiture account 2,80,000 rupees to call in arrears account 1,20,000 rupees. Narration will be being 4,000 shares forfeited, and next journal entry will be for reissue of shares. So entry for reissue is bank account debit, share forfeiture account debit to equity share capital account. Bank account will be debited with 80 rupees per share, 4,000 into 80, 3,20,000 rupees. Share forfeited account will be debited with the amount which is not received, that is 20 rupees per share, 4,000 into 20 rupees, 80,000 rupees. Total amount 4 lakh rupees credited with equity share capital account. Narration will be being forfeited share issued at 80 rupees, and last journal entry will be differential amount of share forfeiture will be transferred to capital reserve account. So entry will be share forfeiture account debit to capital reserve account. Amount will be 2,80,000 minus 80,000, 2 lakh. The differential amount will be transferred to capital reserve account, 2 lakh. So share forfeiture account debit to capital reserve account. The differential balance of share forfeiture account, that is 2,80,000 minus 80,000, 2 lakh rupees will be transferred to capital reserve account. Narration will be being the balancing figure of share forfeiture account transferred to capital reserve account. So we have covered corporate accounting, issue of shares, forfeiture of share, and reissue of forfeited shares. All the shares were issued at par, premium, and discount